You didn't crash, you didn't get a ticket, you didn't even file a claim, and your insurance still went up 18%. So you call them, and they give you that word, rates. Rates went up. Here's what they don't say. Your premium was never the price of your driving. It's the price of who their database says you are. Since 2022, car insurance in America is up 56%. The average full coverage policy went from about $1,100 a year to over $2,500, more than double. And it didn't double because everyone suddenly forgot how to drive. So if it's not about how you drive, what exactly are you paying for? Hold that question. First, let's clear something up. When that bill jumped, some part of you assumed you did something wrong. Missed a payment, forgot a form. That's how this keeps working. You blame yourself before you ever blame the math. The official story goes like this. Cars got expensive to fix. A bumper used to be plastic. Now it's plastic full of sensors. Lawsuits got bigger. Storms got worse. Theft went up. All of that is true. And notice something. None of it is you. You're not paying for your risk. You're paying for the pool. Everyone's crashes. Everyone's hail. Everyone's stolen Kia. But that story has a hole in it. If it's all storms and lawsuits, why does a guy with a DUI sometimes pay less than you? Because there's a second half, and they don't put it in the letter. Here's how the price actually gets made. Before they look at your driving, they pull a number about your money. It's called a credit-based insurance score. Your card balances, your payment history, how often someone checks your credit. It goes into a formula, and out comes a score. And in most states, that score can matter more than your driving record. The Zebra ran 61 million rates. Same driving history, the only thing they changed was credit. Poor credit paid about $1,400 more a year. That's 109% more for the same driver. Consumer Reports found that in Kansas, one traffic violation adds about $122. Bad credit adds around $1,300 with a spotless record. Run a red light, pocket change. Have a bad year with your cards, 10 times worse. Ask the industry why, and they'll tell you credit predicts claims. Maybe it does, but listen to what that actually means. They're not measuring how dangerous you are. They're measuring how desperate you are. And this score, the one that outweighs your entire driving history, you've never seen it. Your bank shows you your credit score. No insurer will show you this one. There's a reason for that. There is a file on you. That's not a metaphor. A company called LexisNexis keeps it. Part of it is called a clue report. Every claim you filed, every claim filed at your address going back 7 years. Stitched to your credit data, sold to insurers. That's what prices you. Call it what it is, a shadow file. Not because it's mystical, because it's kept where you can't see it. You're not being priced as a driver. You're being priced as a file. It was never about how you drive. And here's the part that should genuinely make you angry. Of everything in that file, the piece that moves your price the most is the one piece you can actually change. And it's the one piece nobody tells you about. For years, every time that renewal letter arrived, you paid it with a quiet sense of guilt. You assumed the math was right. You thought you missed a step, or lived in the wrong zip code, or just didn't optimize your life enough. You didn't. And that's exactly why the usual advice feels so insulting. Shop around, bundle your policies, raise your deductible, take a defensive driving course. Edges, all of it. When you call them to ask why the price jumped, the script they read you is designed to put the burden back on your shoulders. Raising your deductible doesn't actually save you money. It just forces you to self-insure the risk while they keep collecting the premium. Shopping around just means handing your exact same shadow file to a different algorithm, hoping they'll penalize your financial history slightly less. They tell you to optimize your driving while they quietly price your financial desperation. They let you feel stupid when the financial guru tips fail, because as long as you're busy hunting for a better rate, you'll never realize the game was rigged before you even turn the key. Meanwhile, the pool keeps getting more expensive. More embedded sensors in the bumpers, more severe storms, more corporate payouts. So that baseline is going to rise every single year, completely independent of your behavior. You cannot budget your way out of a systemic verdict, and you cannot outdrive a shadow file. So you are left with a choice. Most people will keep opening that envelope every 6 months, thinking the number inside is a grade on how responsibly they live their lives. They will keep measuring their personal worth by a system that was built to actively profit from their financial vulnerability. And the industry relies on that. They need you to feel a little bit ashamed. Because a driver who feels guilty is a driver who just pays the bill, takes the defensive driving course, and promises to do better next year. But you don't have to accept that verdict anymore. You now know that when the algorithm runs, they aren't measuring your safety on the road. They are pricing your survival. Look, the bill is still coming. You still have to pay for the pool. The expensive sensors, the hail, the stolen cars, that reality doesn't magically go away. But there is a profound difference between a price you are forced to pay and a verdict you accept about yourself. They want you to think this is a reflection of your driving. You now know it is entirely a reflection of your file. So the only question that matters now is, if you know their ruler is intentionally broken, why would you ever use it to measure yourself again?